Welcome to The Financial Quarterback with your host, Jim Lineweaver.
I'm Jim Lineweaver, your financial quarterback since 1993. At the Lineweaver Financial Group of Companies, we help you coordinate all your financial, tax, legal, and insurance to try to save you money, time, and worry. Today's program is really going to talk about the transfer of wealth. And whenever you're doing this, you really got to pull a team of professionals together, which we've done for you here today. But when it comes to transferring wealth to the next generation, I guess one of the simplest forms is to do a tax-free gift.
That's true. And in 2019, they've changed the laws, so it's up to $11.4 million for an individual or $22.8 million for a married couple. Those can be transferred to the next generation tax-free. So that got rid of a lot of the tax planning we used to have to do when there were much more limits. One thing to keep in mind, though, is every individual can donate $15,000 to a person as a gift, and that would not be taxable to either party.
And Mark, but one of the problems is if once a wealthy person gives away that money, they lose control. It's now held by their beneficiaries. So a lot of my clients will put it in a trust so they can control how that money is used for the children. It keeps the money in the family, hopefully for generations to come.
And when you look at these trusts, they can go to a third party, and that third party trustee, maybe a corporate trustee, a private trustee, can help oversee the distributions of that money.
Right, and so the trust will be able to invest the money as appropriately, hold it how you want it held by a trustee, and also distribute it at the appropriate time.
But there's also a lot of different types of trusts out there, isn't there?
Right, so for example, we have one we call a bloodline trust. So when you give money to a child, it keeps it protected from any creditors or divorce and just keeps all that money in the family. Or you might have an insurance trust that holds a life insurance policy. You want to get, by putting it in this trust, you get it out of your federally taxable estate, and again, you control how the money is distributed. Maybe you say it's distributed for education or when they hit a certain age, things like that.
But also you want capital producing assets to still get a step up in basis, correct?
Right.
Yeah, so if you have, let's say, purchased $250,000 in a stock and it's now worth $300,000, normally if somebody would sell that, they'd get hit with about $50,000 that they'd have to pay taxes on.
That's correct. However, if the husband would pass away, the wife gets an automatic step up in basis to the value at his date of death. So if it was $300,000, she could cash that stock in and pay no tax.
And that's why it's so important to coordinate a team when you're talking about these wealth transfers. And while coordinating financial plans properly is always challenging, it is especially challenging today given the problems across a divided Congress and under the Trump administration. That's why we'll be hosting a complimentary panel discussion and dinner at Lock Keepers in Valley View on May 14th and 16th for those with a portfolio of $500,000 or more, but seating is limited. Call to reserve your seat today. As always, thanks for watching and stay tuned for the Chris Wallace Show coming up next.